Hey there, John Hunter, your mortgage guy, coming back to you again with another rate update. This one for the week ending February 2nd. So this week we saw the market continue to have that push-pull pattern with the Fed leaving rates unchanged at their monthly meeting. And 30-year fixed is running around 6.375 to about 7.25. 15-year 5.99 to 6.75. FHA is about 6.625 to about 7.25, VA 6.25 to 7.25, and down payment assistance is about 7 to 7.375. In the interest rate world, good news is not necessarily good news, and bad news is sometimes good news for interest rates. And that is this week is a perfect example of that. At the end of the week, we saw non-farm payrolls come in at 353,000. Which is about twice what they had expected it, and the previous reports were revised upwards unexpectedly. And that, in a separate report, we had consumer confidence surge the most since 2005. So good economic news isn't necessarily good news for rates. The Fed is hoping that the market slows down a little bit, it eases the pressure on inflation, and then they're allowed to start lowering sooner than later. Now, I still think the trend is down. The market wants to find excuses to go down, and I do believe that that will continue. One of the things I think we're going to see, which is not so much going to be in the reports, but we will see maybe a little bit of pressure taken off of rates going forward here, is the Fed for a very long time did what's called quantitative easing, where they were buying mortgage-backed securities. Well, that lowered the rates down into the twos, if everybody remembers. Now, in the last couple of years, they've reversed that. So all of these mortgage-backed securities that the Fed owned, they've been selling. So they've actually made this rate environment worse, because not only were they not buying, they've flooded the market with supply, which has made rates worse because supply demand, right? So I think we're going to see a little bit of a relief here before the Fed actually starts to cut rates, because the Fed is going to stop that sale. So there will be less of a supply, which will help out the overall price, which will drive down rates. So I think that's the next thing that we're going to see the Fed do. They've all but said it. So I think we're going to see a little bit of that here going into the second quarter. And hopefully the inflation news continues to please the markets, and we're going to see those rate cuts here hopefully in May. That's my guess. Probably not March, unless there's a bunch of information that comes up. I hope it's March, but we'll see. Anyway, that's what rates are doing, guys. John Hunter, your mortgage guy. Come back weekly. I'm doing these once a week, and got a great one starting first of the week for you guys. Is 2024 prediction, and some of the same things are in there, but there's some really good information. I got some great charts about inflation and some really good news. Actually, going forward, I talk about next year as well. So please join me for that, and like and subscribe. John Hunter, your mortgage guy. I'll talk to you soon. Bye-bye.